Welcome to Training for Volunteer Income Tax Assistance, also known as VITA. Session 5, Deductions. This training is being presented by a Franchise Tax Board VITA trainer. That's me. Hi, I'm Angel. The Franchise Tax Board is proud to offer this series of training videos. This is the 5th of 11 sessions. If you have any questions, please contact your local VITA coordinator. But feel free to reach out to FTB's VITA team at 800-522-5665 or by email at volunteercoordinator@ftb.ca.gov. Thanks for watching. Okay, let's get started. In this session, we'll focus on changes brought about by the new federal tax reform law in regards to the standard deduction and itemized deductions. But first, let's take a moment to cover something really important. The personal exemption deduction for taxpayers, spouses, and qualified dependents has been suspended for 2018, which means the $4,050 deduction taken during 2017 for each exemption is no longer allowed. I know this can be huge for some, but there are other changes that may help with that. Let's talk about those changes. As a VITA volunteer, you'll get lots of questions from clients about whether or not they should take the standard or itemized deduction on their federal return. The taxpayer software will allow you to do either, and it's helpful to understand what the new tax reform law does. We like to recommend that you actually enter all information for itemized or standard deductions and let the system do the work for you. For standard deductions, generally, the standard deduction for single filing statuses is $12,000. For married filing jointly and qualifying widow or widower, it's $24,000. And for head of household, it is $18,000. Itemized deductions are completed on Schedule A, and these items will include several things. The first of which is state and local taxes, or also referred to as SALT. These taxes are now limited to $10,000, which includes state income taxes paid, general sales taxes paid, real estate taxes paid, and personal property taxes. That can be something like your vehicle license fee paid to your local Department of Motor Vehicles. Also allowed as a deduction is qualifying medical expenses in excess of 7.5% of adjusted gross income, or AGI. Mortgage interest is deductible. For 2017, federal allowed the interest deducted on a loan of up to $1 million to be allowed as an itemized deduction. For 2018, that cap has been changed to $750,000. If the mortgage was placed before December 15, 2017, the limit is still $1 million, which California conforms to. When deducting home equity loan interest, that interest is the loan has to be included in the $750,000 allowable cap. It also must be used to buy, build, or substantially improve a qualified residence. Our charitable contributions has been raised to a 60% limitation based on your adjusted gross income. And gambling losses are still allowed, but are only permitted up to the amount of gambling winnings. Personal casualty and theft losses, those are allowed only if the disaster area has been declared by the president. An example of this is the car fire in and near Reading. For more information, you can go to FEMA.gov to find out what areas were declared a disaster zone by the president and search for disaster. You should know that it can be included in your itemized deduction, but it is out of scope for our VITA program. You have now completed the 5th of 11 volunteer income tax assistance training sessions. All sessions are available at the Franchise Tax Board's website at ftb.ca.gov. If you have questions, please feel free to contact your local VITA coordinator. but feel free to reach out to FTB's VITA team at 800-522-5665 and by email at volunteercoordinator@ftb.ca.gov. Keep practicing and thanks for watching.